Hi everyone, my name is Thanh. I'm from e-commerce class of Nguyễn Hồng Anh, and today I'm going to present the case study of mobile payment fintech versus the bank giant. Here is my table of content. First we have overview, and next is answer for case study question, and final is the conclusion. Let's begin with an overview of the mobile payment market. Mobile payments have been growing very rapidly over the last decade. Every year, new systems are announced by fintech startups. Large technology companies like Apple, Google, or PayPal, as well as banks and even major retailers. This creates a very competitive and dynamic marketplace. We can classify mobile payment into three main types. The first is universal proximity payment, such as Apple Pay or Google Pay, which work at many merchants that have NFC-enabled system. The second is branded proximity payment, like Walmart Pay or Starbucks apps, which only work in one retailer store. And the third type is peer-to-peer or P2P payment, such as Venmo or Zelle, which allow people to transfer money directly to each other. In terms of market size, in the United States alone, mobile payment reached about $1.5 trillion in 2022. This shows how significant the industry has become a relative short term. When it comes to adoption, millennials and Gen Z are leading the way because they are comfortable using smartphone or financial transactions. On the other hand, baby boomers remain more hesitant. They still prefer to use traditional credit and debit card. And next, let's move to the next part is answer for case study question. First question is, what are the three types of mobile payment and how do they differ? Let's look at three types of mobile payment. The first type is called universal proximity payment. Examples are Apple Pay, Google Pay, and Samsung Pay. These devices work at many different merchants as long as the store has an NFC-enabled terminal. They are convenient because one digital wallet can be used in many places. The second type is branded proximity payment. These are created by specific retailers like Walmart Pay or Starbucks apps. They only work in that retailer store, but they give a company the ability to collect customer data, promote loyalty program, and encourage repeat purchase. For example, Starbucks has almost 33 million users of its payment app, which show how powerful branded system can be. Finally, we have peer-to-peer payment or P2P. These include Venmo, Zelle, and Square Cash. With this app, people can transfer money to each other instantly, just by using an email address or phone number. This has become especially popular among young people who prefer splitting bills or paying friends without cash. Let's move to the next question is, which age group are the most likely to adopt mobile payment apps and why? The answer is Millennial and Gen Z. These are the younger generation who have grown up using smartphones and are very comfortable managing their daily activity on mobile devices. For them, paying with the phone feels natural, just like sending a message or ordering food online. In contrast, baby boomers are much more cautious. They are used to traditional payment methods like cash, credit card, and especially checks. According to the survey, more than 70% of millennials used mobile P2P payment in 2022, while only about 38% of baby boomers did the same. This shows that mobile payments are heavily influenced by age and digital habits. Younger people see them as fast and convenient, while older generations are more concerned about the security and prefer the reliability of cards. Let's move to the third question. Why have fintech startups had a hard time competing with the tech giant? Fintech startups enter the market with the goal of disrupting bank and credit card. However, they have faced many difficulties competing with the big technology company. One main reason is that tech giants like Apple, Google, and Samsung control both the hardware and the software of smartphones. This gives them a huge advantage because they can integrate payment services directly into the devices people use every day. Second, this company already have massive customer base and trusted brand. People are more willing to trust Apple or Google with the money than a small startup they have never heard of. Third, big tech firms have far more financial resources. They can invest in marketing, security, and partnership at a scale that startups cannot match. As a result, many fintech startups end up being acquired. A good example is Venmo, which started as a small app created by two students, but was bought by PayPal in 2015. With PayPal's resources, Venmo was able to grow rapidly and expand its services. And the final question is, what is Zelle and why has it grown so quickly in the last few years? Zelle is a digital payment service created by the largest bank in the United States, including JP Morgan Chase, Wells Fargo, and Bank of America. Unlike Venmo or PayPal, Zelle is directly integrated into customers' bank account. This means users don't need to transfer money into separate wallet. They can send money directly from their checking account. One of Zelle's biggest advantages is speed. Transfers are usually completed within minutes, and in most cases, they are free. This makes it very convenient for everyday use, like splitting rent or paying back a friend. Zelle is also backed by over 10,000 financial institutions and works with Visa and MasterCard. This wide network has allowed it to grow extremely fast. In 2021 alone, Zelle processed over $365 billion in payment, which is much more than Venmo. By 2022, it had about 62 million users, making it one of the dominant players in the P2P space. In conclusion, mobile payments are expanding fast, but adoption is not as easy as expected. Banks, especially with Zelle, still have a strong advantage thanks to a loyal customer and trusted system. For now, many consumers continue to prefer traditional cards, while the future of mobile payment is still developing. And this is the end of my presentation. Thanks for listening.